Good morning, y'all. All right, perfect. Thank you, Jose, for letting me know. I'm assuming you could see the chat with the hands. All right, but yeah, good morning, good morning. So let's jump right into what's going to assist us today in terms of bias. So I've been calling for the bonds to fall, and we've pretty much seen that occur. So what are they reaching for? In my opinion, they're likely reaching for these lows. And then if you scroll way out, we could see, we could see that there's these lows too. It's kind of far away. And we can see the midpoint of this wick here the price could want to reach into. So there's a little lag I'm noticing, so just keep that in mind. So, sorry, I'm like looking at something real quick in terms of like the technical situation with the stream. But yeah, so let's just dig into the process so you guys can get some value right away. So pretty much the first thing that I do every single day, I pretty much look at what is occurring on the yields and the bonds before I move into the DXY. So I've actually been calling for, again, for this to fall and then these to rally, right? So with that being the case, it seems like that's going to continue, right? It seems like we're going to continue to go lower, and then the yields should continue to go higher. This is on the monthly time frame. Another consideration is the fact that we have basically broke through this monthly fair value gap, which in my opinion is pretty significant. We've basically reached outside of the monthly fair value gap, but we have reached into this order block here. So yeah, let's take a look at that. So it's a monthly order block. So for us to get up into this high, if we close above this midpoint of this order block here, we also have a volume imbalance if you look closely. Looks like it blew through that volume imbalance, and now price is reaching up into the order block here. There's also an order block here, right? So for us to get down below this low, it has to close below this order block. Right? If it closes down below that order block, we should easily be able to see a slide down to there. We also have, again, volume imbalance in the bonds as well. Let's go check these highs here. Right? So there's a triad between the interest rate markets, which we have been pointing to. So let's observe these highs and see if we can find some type of SMT between the 5-year, the 10-year, and the 30-year. So it looks like this one failed to make a higher high in the 5-year. The 10-year made a higher high related to this candle in this one. And then the 30-year also kind of breached this high as well. So there was SMT here. Okay, so that pushed price lower. And I'm not going to explain everything that I discussed in the last couple of live streams referring to this. Definitely go watch those. But everything that I've basically been talking about has come to fruition 100%. In terms of it falling lower, getting down into this fair value gap on the monthly, and us continuing to potentially reach down into these lows, right? So yeah, give me 1 second. Yeah, if y'all could let me know if you can see the chat, that would be wonderful, because my end, it looks like there might be an issue. Hopefully not. Hopefully not. But yeah, so yeah, just continuing to press forward, right? We basically still have our assumption that price is going to potentially continue to go higher in the yields. We've broken through the higher time frame fair value gap. We've actually used the 2-week order block here, and it has been used to push price higher. And again, we've now broken through these fair value gaps, so they turn into inversion fair value gaps. So now we should be looking at them as a potential support level to push us higher. When does my bullish sentiment change? Well, I want to see us get down and attack these lows. If this breaks and this midpoint of this order block breaks, and we start disrespecting any of these inversion fair value gaps, that'll give us potential red flags to now get back in line with potential sells in the yields, and that would translate to this potentially being bullish and doing the same thing but just on the opposite side. So breaking through the midpoint of this order block, attacking this high, so on and so forth. But until that occurs, I'm not leaning that way. I'm leaning towards this going lower, these going higher, and then that translates to DXY as DXY going higher, and then that translates to the S&P and the indices to go lower, which I've been calling for literally weeks. And if you take a good look at what we have seen, price has basically dumped off the face of the earth, right? It's basically fallen aggressively, and it's been something to watch, that's for sure. It's definitely been something fun to watch. So yeah, so let's move to the DXY specifically. Okay, so let me see if I could pull up the DXY chart. Okay. What's up, brother? What's up? So I'm taking it that the comment you guys are placing is confirming that stuff's working, like you could see it. If you could just say a yes or no, that'd be great. Appreciate y'all hopping on. What the hell? Paper trading. But yeah, so get out of this freaking thing. What the hell? Oh, it's already logged in. Okay. So we have again so referring to the indices, I mean the indexes, when it comes to the relationship with the interest rate markets and the DXY, it's basically looking like DXY wants to continue going higher. Something I want you guys to pay attention to as well, that I've also been pointing out in my private group for the last weeks. Yo, thank you so much for confirming that, brother. I really appreciate it. I'm kind of new with live streaming, so I just want to make sure everything's working properly. Right, so but yeah, so something I want to point out to you guys in terms of what the DXY has been doing. So in my private group, we have been basically talking about how once price got above this high here, I started kicking us into DXY potentially having an extended move to go higher off the basis of if we go to this weekly time frame, we can see how this is an original consolidation, right? we have this high here that was left. So essentially we have this potential area to be targeted. But price basically dug down to a discount and then has rallied from that discount, shifting market structure on this higher time frame. And then it returned back down into, it didn't really reach down into here. But I'm sure there was some type of PD array in there that it did reach down into. Maybe we could look and see exactly. This volume imbalance here on this daily chart, 2-day chart. But if you look at this, there's an original consolidation. Okay, I pointed this out once we got above this high. There is a market maker buy model essentially, right, to keep things short and simple. And that has been performing, and before the indices turned around, right, before it made this big move off the SMT that I also pointed out well ahead of time in my private community. I think I even pointed it out in some videos that I posted recently on YouTube. But back in January and February, we had this sentiment, but we were waiting, right? Because I was seeing on the COT, on the other fundamental analysis tools that we use, that things were promoting us potentially tipping over, and then DXY continuing to rally aggressively the way that it has been, and that it was doing was it broke that swing high and shifted market structure on that weekly. I pretty much assumed that this was going to tip over at some point, and I had this daily fair value gap also outlined, but you can also see on the other videos that I posted, the live streams, you'll also be able to see that I've been calling for lower prices, and price has done that, and exactly to the place that I asked for it to call to, or to go to, it pretty much did, right? All live, all whether here or in my private community. So things have been known, right? It's not just pulling a rabbit out of the hat and just magically saying, oh, look, it went there. We didn't have two double sides, right? We only had one direction that I was trying to favor. And inside the consolidation, we've also discussed how to navigate consolidations. And the NQ has had a wonderful, opportunity to study how to navigate consolidations, and I've been really digging into that concept with my private community. But just one thing I can share with you guys is when you have a consolidation, you measure out from the high to the low, get that equilibrium point, and generally in that higher time frame consolidation, when it's going to leave, we assume bearishness because of fundamentals, SMT, intermarket relationships, and a couple other factors. But regardless, if you're in a consolidation and you have an idea of where it's going to reach to outside of that consolidation, you can use that high to low to get your equilibrium. And when price returns back to that equilibrium, when it's going to break out, regardless of whatever side it's going to go to, generally that equilibrium point is going to be a point that you want to pay attention to, because it will use it just like it did here as a launching pad type thing. And it just helps you kind of navigate a little bit, right? So that's one little tip I can give you about trading in consolidations. And then another tip in relation to consolidation is market maker buy and sell models are extremely effective when you're able to navigate those inside of a consolidation, because you don't need a bias. You don't need a bias at all when you trade a market maker buy or sell model. But yeah, it's a deep conversation for probably another day. But yeah, just wanted to lay those seeds. But yeah, so DXY is rallying. We do run the risk of price giving us a retracement. If that is the case and price does choose to retrace on us, we could potentially see the the indices give us some kind of a short-term rally. We have shifted market structure pretty aggressively, which may, of course, change this bullish sentiment. People are talking about recession and all these things, of course, because prices fallen. But we've been ahead of this for literally, like I said, months, right? So this doesn't surprise me. So yeah, with that being said, I'm going to continue seeking potential sell side. We could see this low. Let's observe the low and see if there's any SMT. So there's no SMT. There's no SMT. See, what PD arrays can we outline? Well, we see this daily fair value gap. What's below us in terms of a lower range target? We could potentially end up coming to here, right? And if we just mix that in with the weekly, we can kind of see how there's also in confluence there's a weekly fair value gap that's below us, and then we also have this wick here. I would like to see if we're going to continue and be very, very heavy, a signature to signify that really heavy price delivery to the downside would be this wick being respected, or us just staying inside this fair value gap as a whole, and then DXY maybe leaving this low. So one thing I want to point out too that I was talking to my private community about yesterday is we are looking at this as a market maker buy model. And because that's the case, this is our first stage accumulation phase on the sell side of the curve. Then we can see how this is our second stage accumulation on the sell side of the curve. Then we have our smart money reversal here. And then now price, not now, but earlier in March, price basically presented us with a first stage distribution on the buy side of the curve. And then now we are inside that second stage distribution level, which should present us with a pretty quick, sudden move, at least in the context of the weekly, which could be, could take a little while to get up into here fully. But it should have no problem getting us up above these highs if it is going to be the second stage distribution. That doesn't mean it won't retrace a little bit, right? We do still run that risk, but where is it going to possibly retrace to? It should only retrace down to here, okay? Because this is the accumulation area on the left side of the curve for the market maker buy model we're observing. There was also a market maker buy model in here, right? So inside the larger frame market maker buy model, there's also these smaller range market maker buy models. And if that doesn't make sense, go watch my market maker video, and I discuss the fractal nature in market maker buy and sell models, application, and just a lot of different things that signifies how important and helpful the market maker buy and sell models are. Okay, but yeah, so that's essentially the narrative that I'm looking at. I'm looking for I don't know why it has monthly low, it's a monthly high. All right, so I'm aiming for the draw on liquidity to be this high here. Of course, it is a good distance away, so it doesn't have to hit it today. We are at an order block here too, so we want to observe what the reaction is going to be from that. And then we also have other key levels to note, which is this wick here. Could measure out this wick, okay? And price can use that as a target, right? It uses the quarter points of a wick and the midpoint on the higher time frame as targets generally. So that's another thing you can add to your arsenal. I have given a list of liquidity pools. If you need that, just comment liquidity in the comments of this video, and I'll send you the PDF that basically breaks that down and shows you all the different things that you're going to want to study moving forward. So yeah, you can add this to that list, right? The higher time frame wicks, break them down into quarters, each quarter point and the midpoint and the high and the low. Those are all considered as targets as price prints, right? And attacks specific liquidity. But yeah, so again, we're inside, I'm assuming we're inside of a second stage distribution level. So us retracing into this this area here, right? It should act as support, and we should see it bounce higher. We should leave this open as a breakaway gap. It shouldn't want to come down to there, because again, the second stage distribution, as ICT teaches, if that is in fact what is happening here, should be a quick move. It should not have deep retracements, and we're really close to these highs in the grand scheme of things. If we look at this, that's pretty close, but if you go to the lower time frame, of course, it's pretty far. So again, it could take time. So you got to remember, time is one of those things that can really screw you up in your analysis. These higher time frame charts take a while. But keep this in the back of your mind that we could potentially see price go up there, and we don't want to see it get down below this candle's low here. We want to see it stay above this range and just continue to gradually move itself higher, right? I want something like this, right, to push us higher. Okay, there could be a retracement, so we'll observe that. We can see how all three indices have now, off the SMT that was formed here at this high and this high, has now pushed us lower. So price is now selling off. We had a breaker here on the 8 hour. I'll go show you what that looked like. So the low high with SMT, and then a lower low, and then price came back, retraced to a premium. So from high to low, this is your YouTube model for a sell on this 8 hour time frame. And we can see how price continued to do a lot of deep retracements, showcasing high resistance for any type of retracement going higher, but then low resistance every time price wanted to seek price going lower, or to seek lower prices, signifying, in my opinion, that this sell idea could have been trusted with confidence. And that's essentially how I've been walking my private community forward, and how I've been talking to you guys. I've been saying that, you know, things are going to go lower, even before it even showed that they were going to go lower to the normal everyday trader. And even at one point, ICT said he wasn't going to trust it. You know, I mean, there's always that factor that I could have been wrong. And then there was also the factor that he could have been wrong, right? But I had conviction behind his analysis, his concepts that I've been employing. But given, of course, the fundamental or geopolitical situation that's happening, you know, it could be a wild card. So, yeah. But yeah, so in terms of today, I mean, we can see how the indices here, the S&P, I'm going to probably trade the S&P today. Let's just double check what's happening. So we do have this previous low that was taken, previous week's low. We do see this fair value gap as well that has been swept. Right, it's been fully completed, and now price is retracing. And then we have this previous week's low here, which probably is a previous month's low. Yeah, it's a previous month's low. So let's so it's a previous month's low. Make that purple. I mean, like a pink. Make it super obvious. Okay, so that's a previous month's low here. And then, of course, again, we have the wick. Let's go to the daily, see if we can find a more defined wick. Yeah, so again, like I was saying earlier, the wicks here, you can break them down into quarters, right? And then you can target each quarter. Okay, so price is now retracing. The targets I want to see as we move through this low, using this tactic, I mean, we have pretty set targets, right? The quarter here. Oh, shoot, excuse me. Got freaking hiccups. But yeah, so we could see how there's the quarter here, midpoint here, and quarter here, and then finally the low. So price has now hit a low. It's retracing. It could retrace and then just give us a quick sudden move to the downside, which I personally believe could be the case. I think that if we observe, shoot, let me get out of that one and go to, okay, yeah. So in terms of, shoot, let me, so yeah, in terms of what we have already done, prices basically fell off. It wouldn't be unreasonable for us to retrace and then continue going lower. Okay, so that's essentially what I want to see. And then once we start dropping to these lower time frame charts, let's actually go to the S&P. Okay, So, and then we could stick to the S&P. Oh, one thing I forgot to point out. This Friday's high and low, that's part of the list of liquidity that I have on the list. So you're going to want to observe on Sunday and Monday's trading, Friday's high and Friday's low from the previous week. Generally, that is important in terms of targeting for liquidity. Okay, so you want to definitely consider adding that to your arsenal if you haven't already. Because obviously you could see, right? Friday's high was left, but Friday's low, after price retraced into this order block, basically became significant and ended up being targeted on its way to this daily fair value gap. Okay, and then we got this order block, this daily order block. So I'll turn that blue. You want to color code every point of interest that you mark out as well. And then again, let's look at the news. So we have news coming out in 3 minutes. So we're going to want to observe. So again, I think that price could rally up, but I want to see us go lower eventually. Okay, so that's the key. So if the news comes out and has any impact, I want to see that impact could push price higher and then just to go lower. So that would be us aiming for our run-on stops, and then we would be able to try to get in line after the run-on stops is fulfilled, and then we can anticipate whatever model we're looking for at those highs. If you do look at this low here, this low, and then you move down into this low, you can kind of see that there was an SMT there. So there's definitely an SMT there. So that being the case, that could push price higher into a retracement. But if DXY falls off the planet and this high breaks, then we may see us reach a little deeper into those upper levels. That doesn't change what I'm believing is going to still happen, unless DXY just completely falls off the map and then yields and everything change as well. For now, given the price action we see on the lower time frame and higher time frame, I'm thinking that we're going to continue going lower. So this retracement here is literally just that. It's just a retracement. We're moving into this wick here. We have this fair value gap. We don't want to see it really break out of this. I mean, it could maybe to go up into, like maybe this wick here. Then it may even reach into some of this, come and try to clear up some of this here, right? But yeah, overall, I want to see us reach down. My new target, since the daily one has been fulfilled now, which was this that I've been pointing to for literally weeks at this point, months. I feel like the next target is now going to be the fair value gap down there on the monthly chart. I mean, not the monthly chart, the weekly. All right, so we have one here as well. Let's see, is there one on this one too? Yeah. So yeah, that's my new target. Okay, so with that being said, let's switch that one for this one. With that being said, let's get down to the lower time frame charts. Okay, so I hope it makes sense with what we're looking for. Looking to see what occurs here after this news event. Are we going to push DXY lower to then see a retracement, or are we going to just do a little retracement here and then continue to go higher, anticipating a fast move, large range moves to the upside to fulfill this market maker buy model, which would then send this lower to this weekly fair value gap. Okay, so yeah, with that being said, let's drop down now. So we understand what DXY is going to do, so we don't really have to hold that up anymore. We have seen the SMT here that we got to pay attention to. We see the midnight open price over here, which was pretty much a big drop lower. Oh wait, no, it's the Sunday. That's Sunday's open price right there. So the midnight open price is here, right? So prices basically got below that, prices rallied up. Again, we see this fair value gap here. We also see the daily fair value gap, the previous one that has now been fulfilled. We see Friday's low that has been taken out. We do, of course, have buy side that's sitting up above us. But I personally believe that we should see, well, I want to see price go higher to go lower. All right, this whole thing here, this consolidation, could set up a run higher to set us up with a market maker sell model, potentially from the fair value gap in here. Let me just go double check what this fair value gap is. Okay. So let me remove that. Okay. So again, we have this range. So yeah, price moving higher, potentially to then go lower. That's still in the cards for me. Definitely want to see if that's going to be what takes place. DXY is kind of running lower right now, so we want to see how influential that's going to be, right? Like how impactful that's going to be, how extended that's going to be, whether it's going to be extended or not. Again, I don't want to see it be super extended. We are literally wanting to see price do this type of action, go lower into potentially this fair value gap and then rally if anything. But again, that's permissible, like I said. But the faster it can move, the better. If it can not even reach down there and hit the midpoint of maybe this wick here or this wick here and bounce, or not even do that and just continue, just go higher, that'd be great, right? But it does run the risk again of us getting down into here. All right, this here is the okay, so just so everybody still understands what's happening, what the level is here and why it's important, and how that's kind of dictating what I want to see. So let me tell you this. So if a fractal high forms here, what's a fractal high? Well, a fractal high is like this: a lower high to the left, lower high to the right, and one larger high in the middle. If this type of thing occurs here, the next 2 days after that, 1 or 2 days after that, will send price into some form of a PD array before it chooses to run if it is going to continue being bullish. So that could lead to us near term having a bias that's aiming down here. I'm assuming that it could want to do that, so got to have an allowance for that. And then of course that's going to lead us to the indices trying to go higher for a small period of time, potentially. All right. But yeah, so the open price is here. Price is dug below that, and then now price is basically rallying from that. And I mean, if you wanted to look at the YouTube model, let's go to the 1 minute and see what has transpired. Okay, so remember, this is our daily, or I think it's like the 8 hour fair value gap, right? This one. Let's just go double check real quick. Yeah, it's the 8 hour. Okay, so that's our 8 hour fair value gap. All right, and now price is just pushing itself up into that. Okay, so with what I'm seeing here, I don't see anything from my model, maybe besides this here, that could have aimed for these equal highs. Right, with this entry being below the midnight open. We can see how this also set equal lows. Set some significant equal lows here. Again, this whole move here that's going higher like I was saying on, I think it was a 15-minute time frame, this whole consolidation to this rally could literally lead us to price just giving us a market maker buy or market maker sell model buy side of the curve to then hit whatever PD array it's reaching for, which in this case would be a level inside this fair value gap on the 8 hour, to then potentially give us a smart money reversal, to then give us the sell side of the market maker sell model. Okay, so that's my anticipation of what I'm looking for. If price is ever bearish and it's retracing, I automatically think, okay, well, are we in a market maker sell model, basically pushing us into that premium array or premium level to then give us the dynamics of a market maker sell model to go lower. And then, if it's bullish, you flip it the other way. It'd be a market maker buy model, right? It retrace lower to go higher, right? For a higher time frame retracement if we're continuing to be bullish. But yeah, we can dig into that a little deeper at another time. I do have a market maker video that you should definitely check out if that description, what I just said, interests you, because it's super, super helpful. So yeah, essentially that's what I'm looking for. I'm continuing to try to see price wanting to maybe aim lower. If it does continue to just blast through this and then DXY chooses to continue to drop, again, like I said a second ago, we do run the risk of price coming down into here, but we have this possible market maker buy model framework, so we don't want to see it blow past this, but it's permissible for price to come down there, even if it's going to continue to go higher at some point. So yeah, we don't want to see this break, and we also don't want to see it break out of this zone here if we're going to continue being bullish on the DXY. And then, of course, that would lead us to continuing to aim for sells in the indices. So that's the whole narrative as far as what we are looking to see accomplished in the coming days, right? And you can see that fair value gap that we outlined is here below these lows. So this here could very well be a market maker sell model right here, pushing price lower to get down below these lows into the fair value gap like I was describing. When it wants to go lower, it likes to set up market maker sell models. And when it wants to go higher, it likes to set up market maker buy models, right? We're always in some form of a market maker buy or sell model, okay? Sometimes they're more clear than others, but regardless, there's always something that you can frame on a particular asset relating to this concept, which is why I employ it, and it's one of the pillars to my approach in trading. And like I said in that market maker video, like the intro, this changed everything. And I'm sure, just like it's changed everything for a lot of my students, it would probably change everything for you if you spend a lot of time digging into it, asking questions from people that are actually willing to help you, and then just pulling examples out, right? So it's definitely something you want to focus on. But yeah, this is a consolidation, accumulation, reaccumulation, smart money reversal, okay? Then this presented a first stage distribution. Once we get down into here, it should be very quick to bust down through this low into this fair value gap. So with that being the case, with DXY falling lower, we should potentially be able to see the indices do the rally. Again, I'm looking for this to go higher, just to go lower. So, engaging in a buy to get us up into the premiums up here, that's totally permissible. But I prefer to take sells, right? And given this potential market maker sell model prediction or assumption or an analysis, you can frame counter trend ideas. Like if price is bearish and you're anticipating it to go higher, you can anticipate the buy side of the curve, right? And then you can take entries according to that, right? So I'm just trying to open your minds to different perspectives and how some of these things are used aside from just theory, like actual real life application. Like this is a higher time frame bearish run, right? The next higher time frame candles printing, and now it's retracing. Inside that retracement, how can you break that down? Well, you can use the market maker sell model to go if you're going lower. or a market maker buy model framework if you're going higher on the lower time frame, right? So I hope that makes sense. I hope that didn't lose you guys. But today, again, I'm looking for reasoning to try to go lower, unless this just completely blows through these levels. Then I would be trying to look to see price, potentially seek more higher prices. Not long term, right? It would just be near term, because we have the wick here as well that could be used, right? And if I measure that out, let's go see exactly where that's at on that lower time frame, right? It's literally up there. So we can literally come all the way up here and still be valid, right? It's from... yeah, so it's from here, this low here, to the high here. That is the whole wick of that last candle, that big candle. Okay? But again, this could be a market maker sell model setting up here potentially. I'll mark this off here. So yeah, I hope y'all have gotten value from what's been shared so far. We don't just get on the chart and just start gunslinging trades. We break things down, try to understand exactly what's happening, and then act accordingly as price presents us with the story it's telling us, right? So yeah, again, I'm pretty much looking for price to go higher to go lower, and then DXY to go lower to then go higher for the time being. So that's what we're gonna sit and observe. So yeah, we can kind of see how the DXY is, again, it's dropping, so we're not going to pull ourselves in too many directions. Thought process wise, we have basically discussed all that I need to discuss to determine a potential bias, and it looks like, again, we are literally gonna, it's either gonna come down here and not break this low and do what I said and leave it open potentially, and then that would lead us to this having that similar action the other way. That's preferably what I want to see. If this doesn't complete and we could turn all the way around and go higher without having to even, attempt this low or this fair value gap on that, I believe it was 8 hour, or was it on daily, on the daily, right? If we can just bust lower real quick here and then just turn around and start shifting market structure higher and then have that translate to the indices going lower, breaking through lows, and this order block here, then that's even better. Then we can easily position ourselves in our demo, right, to go ahead and try to bag something and take something down. Okay, so yeah, I hope that makes sense. Again, if y'all have questions, let me know. But yeah, things don't have to be super complicated, right? We've used all of our analysis with the other assets. We have our fundamental analysis that's been done already. That has basically been proven just in the price delivery and how it's behaved. And then we kind of have our prediction of what's going to happen. We see frameworks on the higher time frame in terms of the market maker models, and they're just being respected and just going exactly where we want them to go. Bias doesn't change every 5 seconds, right? It's higher time frame has one narrative. Inside that, it'll have little narratives down below in the lower time frames, and then it'll just deliver itself to that specific area or those specific areas on the higher time frame. And you just adjust day to day given the context of what the lower time frame's doing, but never lose focus of what the higher time frame bias is, because knowing that will make you understand when you should push, when you shouldn't push, what's high probability, what's not, what's a part to that, right? It's a part to high probability or not, right? And you could just navigate things in that context. So yeah, if we shift market structure here, that'd be wonderful, because if that happens and then we also see this shifting as well, that would be beautiful. Let's go look at the regular trading hours. Yeah, so we have this big gap from yesterday. I've outlined that as well in my private community. Yeah, we called this whole move yesterday beautifully. I think I shared it on my story. But yeah, it's been fascinating to see how precise things have been this year. At least the last couple months. So I'm just like mapping out the regular trading hours gap, just right here. So far, the regular trading hours gap looks like this. You could see this was the previous PM session. At the end of that PM session, that's when price closed. Okay. It goes to 1:30 or 4:30 for for the East Coast, right? So this is our regular trading hours gap. Let me turn that like a yellow color. That's more obvious. Yeah, I want to see this go higher to go lower, potentially set up a market maker sell model. And then, like I said, this whole time, I want to see DXY potentially break through this high, continue to press on higher in the context of this price structure here being a market maker buy model on this weekly chart. We are at a second stage distribution area. For those of you that are familiar with market maker buy and sell models, if you're not, check out my video, like I said. And yeah, that whole frame of thought gives me the trust and potential confidence that we shouldn't see any deep retracements happen lower. We should just see price want to continue pressing on higher. Doesn't mean there won't be any retracements, right? There will be, and today might be one. But all in all, I want to see us continue to rage higher. So in the context of that, any type of sells should be short term for the DXY and lower risk. And in terms of the indices, any type of buys should be short term, lower risk, and then sells for the indices are going to be where we favor the most. And then of course buys for the DXY is going to be favored the most as well over the price going lower. And so yeah, with that being said, what's my bias? Well, my bias is bearish. Okay, price running higher again from this consolidation could set up a market maker sell model, because we're always in a market maker buy or sell model. Okay, and so if like the higher time frame drops aggressively lower, the retracement, inside the context of that retracement, you're going to possibly see something like this, right? It could set up a consolidation to run higher into the premium array, to then set up a smart money reversal to then deliver the sell side of the market maker sell model to then push that higher time frame lower. That's all in the context of a retracement to go lower on the higher time frame, right? Like say the daily, right? A lot of people don't know that, like perspective and how to apply the market maker models in the context of the higher time frame candles, and how that paints a picture on the lower time frame, and the fact that we're always in a market maker buy or sell model. That's just how price works, right? It's just how it works. The run higher is manipulation, and then the push lower is the real move, right? But all along the way, there's phases, different phases in the market. And so yeah. So I see two of y'all with me here. I appreciate you coming and spending time with me. If y'all could do me a quick favor, if it's not asking too much, to let me know how the stream looks and how it sounds. Just so, because I'm getting like some notifications saying there's possibly issues. Again, discuss the bias, and if you're not aware of what the bias is, definitely let me know too, so that I can get you in line with things. Because there's no reason staring aimlessly at somebody talking about something if you don't understand what the hell is going on, right? So yeah, if you could do me that favor, that'd be great. And then if you have questions, you can leave them in the chat and I'll answer them. So yeah, so far this is our regular trading hours gap. And again, we got the sell side here. So yeah, we got some buy side liquidity like this high. What you want to pay close attention to is how the reactions are here at these highs. We did have SMT at these lows, which is price higher to initiate this upper range move. Let's look at the NASDAQ. So it's left equal highs on the NASDAQ, and we've created higher highs on the Dow. Right, so we have buy side here, buy side here. Again, we're inside of this higher time frame level, which I believe was the daily fair value gap. Yep, it's that daily fair value gap. I'm sorry if you hear the train, freaking train. So yeah, in terms of possible entries, we see how this was a shift in market structure here. See, there's a fair value gap in there. If you had the idea of being bullish, like we've kind of framed out and said that it would potentially be doing, there's an entry here, right? It's a fair value gap, is it not? That's a shift in market structure. Run on stops. We have a simple narrative that we are retracing, right, to go lower. So framing out the retracement to go lower is still a chance to engage. But like I said, I personally am favoring a different side, right? I'm favoring the sell side. Okay, and I want to see DXY rally. It looks like that may come to fruition, right? As I've been saying. And we just went higher to go lower. Again, this is a consolidation here. It's accumulation, reaccumulation. Could present us with a smart money reversal. And then even this fractal here could be presenting us with a market maker sell model with the same context that we discussed all throughout the morning. In terms of this consolidating to rally up to then go lower. Because nothing's changed, right? The DXY, like I said, if this high breaks, that's exactly what we want to see. We definitely want to see that happen. So this order block that I did have outlined is not valid anymore. We do have this wick here. We also have the midpoint of that wick here, which is an implied fair value gap. You can see just how beautifully prices come off of that. So that's two big wicks with one large candle in the middle. When they overlap like this, you take the midpoint of both of them, you get a range, which is called an implied fair value gap. And you can see how price came down, hit it, and now ran away. It's one of those hidden gems that ICT has talked about, but they're highly effective. And mind you, we're in line with our bullish DXY bias, given the weekly market maker buy model framework. We're inside the second stage distribution here, which you could see the reaction off of it was quick. And we're hoping that this doesn't come down lower, or we want to see it go down lower. Hope's not a strategy. But given what we have seen analysis-wise, the odds are, in my opinion, more stacked with price running aggressively higher faster than, versus us seeing deep retracements. And this would be pretty deep retracement. Right, but it's still permissible. But I don't want to see that happen. So we're going to continue watching to see how things deliver here. We do have this fair value gap up here that could be significant. Right, so if one of the indices also hits the fair value gap up here, and then some of them don't, like this one has hit the fair value gap, but the other ones have not, like they have failed to get up there, that is a form of SMT. If that holds and continues to be that way, that's a form of SMT, especially if we see a shift in market structure occur on these lower time frames. Is this thing loading those? Loading all the wrong things. The hell? So because things look like they are going to play out, we're going to stick to these lower time frames here. I would love to see us punch above these equal highs, then give us a strong shift down. That would be beautiful. Again, my mind is looking at market maker sell model here because of the DXY likely going higher. So I'm keeping that in my mind. And that's what's driving a lot of my reasoning as far as what I'm trying to see, right? Prices basically swept the Asia high and low. Well, the Asia high. We also have these lows here, which are the London lows. So we've pierced the buy side. Hopefully that can be pairing smart money sells, continued sells, with willing buy side liquidity at a premium array to then pair that to go lower. Why is this logged into all this stupid stuff? What the heck? Okay, so yeah, DXY is rallying here. Like I said, if we get above that, that's very much something that I want to see us continue to do. So now we have run on stops to the sell side, shifted market structure, bullish. Now we have a fair an order block here to observe. Okay. Then we want to see how that performs, whether that's going to just give us, again, continued moves higher to then bring that over to the indices so that we can further trust the potential sell. And now we have equal highs left. So in my opinion, I don't think they're going to leave that. But we have taken out buy side on the Dow. We have lower highs on the S&P. So I mean, this here shows you that the S&P is the weaker out of the three, as well as the NASDAQ. But the S&P is the one that failed completely to make the higher high. So if it is going to sell off, I'm looking to sell in the S&P, because the S&P is helpful to help you gauge kind of like what's going to occur. So you see this wick here, when price is delivering into a wick, like a premium wick, and you're looking for price to go lower, that is used as a premium array. So if it stays below the midpoint of this wick here, that can give you a significant signature showing that we have weakness. But we're ahead of the 6:30 open, or 9:30 open, so we could still see again price get above these equal highs here. But there is SMT, so keep that into consideration. Again, as we've been talking about all morning with the DXY, there is a market maker buy model on this weekly chart. We are inside the second stage distribution zone, so I'm anticipating very small retracements and quick sudden moves higher to get us up into, you know, at least this wick here, or this big range here, which is like the monthly wick. So my near-term target is this midpoint. That's not to say that price can't retrace, like I've been saying, because it's been one-sided, but that's what I'm favoring. I want to favor that, which is bullishness. And then, of course, that translates to bearishness in the indices. Like I said, if the wick midpoint is respected as a premium array, that shows weakness. So if this continues, that's wonderful. And then the next place that I would consider to try to position myself would be below this order block here. This here, because it failed to break this high, that's a mitigation block. Okay, this high to that low, failure swing. If we get down below this, this becomes a mitigation block. Okay, and then of course we still got the regular trading hours gap we're trying to observe. And again, like I said, I'm going to say it one more time, and I must keep saying it over and over and over in many calls. When you see price one-sided on the indices or any asset, and you're looking for price to retrace to go lower, you want to observe that retracement in the context of a market maker sell model, because it goes lower to go higher, right? What's it doing? It's accumulating, then it's accumulating some more, manipulating price higher if we're going to go bearish to a premium array to then switch and go lower and start attacking the actual bias, right? And then you can participate and have a deeper framework to the ideas that you're studying, no matter what model you use, whether that's the YouTube model for entry, whether that's breakers, mitigation blocks, order blocks, fair value gaps, doesn't matter what it is. If you use the market maker model context to frame things out and help yourself, it's an extremely effective way to phase out your trading, like put it in phases, and then start to really position yourself, or figure out where to position yourself the most effectively as you walk forward as a trader. Right, so yeah, this is essentially what I'm looking for. Nothing's going to change dramatically unless something dramatically changes. So again, this wick is still being respected, so that is giving me confidence that this is not going to want to potentially get above here. If it was after the open price for the New York session, I would trust it a whole lot more. But until it is after that, we still run the risk of it. Opening and sending a wick higher, stopping these people out to then go lower. But yeah, so this 15-minute also has this order block. So yeah, if we get deeper down below that, that's going to be something that helps me trust going lower. Again, that's what I favor, is price going lower, as I've been saying. And this low is my target. Okay, as I've been saying this the whole time. I didn't switch. It's always been one-sided. The rally did get framed out as a market maker sell model, but the buy side of the curve to position ourselves potentially, or set up a higher premium for us to then target, just like smart money, and look to offload any positions taken at sell side liquidity. Right, so pair with buy side, pair your sells with buy side liquidity to offload at sell side. That's what they're doing. That's why they manipulate higher to go lower, and that's why they manipulate lower to go higher. Right, that's like why they're doing what they're doing. Right, it's like in the simplest terms. So yeah, I hope y'all been getting value. Definitely, if y'all got questions, leave them in the chat. And yeah, if you haven't subscribed, definitely subscribe. Really helps the channel out, and I truly appreciate it. And for those of you that are here with me right now, I'm grateful for your presence with me, and you taking time out of your day to come and hang out with your boy. So appreciate y'all. Yeah, so watch this and watch what happens here. Let's see, this is an order block. Let's see if that is respected and see if that pushes price lower. If it does do that, if it does push price lower and gets us below this low, I think that could be pretty significant. Again, we are before the open price, so we are ahead of the manipulation. So anything that we're trading in right now is ahead of the manipulation. So if price is going to go lower, that's visually making sense, because this went higher. If we eventually go lower, that shows you that before 6:30, before 9:30 Eastern, this whole run higher was the manipulation. All right, but we'll see if that holds up. And if it doesn't hold up and price does choose to run aggressively higher throughout the session, then that just means that the retracement here is what's actually in play. The retracement on the daily for the DXY, because it's been so one-sided. But again, that's not what I want to see. I don't want to see that, because we are in a point in the chart, structure-wise, with like the possible market maker buy model, second stage distribution to go higher. That should send us with no deep retracements. But it is permissible for this to retrace, to maybe scoop up sell side here to then continue going higher, right? Because the DXY, nothing's changed. Right, nothing's changed at all. So yeah, now DXY, I mean, we could see it's still pushing higher. All right, shifted market structure. We're now retracing here. We're still inside this wick. Remember what I said about the wick? We have an implied fair value gap here as well. So large wick, split it, and observe what occurs. Split it and watch what happens. All right. Inside that implied fair value gap, there's also that order block. All right, let's see if that holds. So again, that's what I favor. I favor us going lower. Where specifically? Down below this low. What kind of low is that? That is a London's low. So yeah, it's the life of the trader, right? Sitting and waiting, observing, validating, invalidating, reflecting, being peaceful, not being a crackhead. Don't be a trading crackhead. It never ends well.
To get started in data analytics, you don't need previous experience or a degree. The Google Data Analytics Certificate will teach you to code in R, to code in SQL, data visualization, and learning how to problem solve like an analyst would. At the end of the day, being a data analyst is about communication. It's the number one skill that you'll pick up. And so
yeah, so there we go. It's holding at that order block and implied fair value gap. DXY is continuing to race. I'm telling you right now, if we weren't before the open, if this was happening after the open, I'd be entering the trade right now, given what DXY is doing. But one of my rules are I never enter before the 9:30 open, 9:30 Eastern open, because that's the time when I have been burned the most. Like over the last 4 years, that's literally the time when I've lost the most trades. And I just refuse, even if it does play out, I just refuse to break that rule because of all the damage that it did to me early on. You know, and even in recent years, every time I try to break that rule, it always does some stupid nonsense and then goes my direction after. Because like I said, before 9:30 Eastern open, we're inside of the manipulation. It's literally manipulating price before that. And then once that opens, it manipulates even further. Then it presents you with the moves. That's why another thing is you want to wait for macros. Wait for the macros, right? Like right now, there was a macro, 610 or 550 to 610 Pacific Standard Time, or 850 to 910 Eastern. Don't want to confuse y'all, but those are macros. The last 10 minutes of an hour, starting at 5:50 Pacific Standard Time or 8:50 Eastern, all the way to the end of the last hour of trading. Right? There's little macros at those times. The last 10 minutes and the last 5 minutes, or last 10 minutes and first 10 minutes. So it's like a 20-minute window inside the kill zones. Okay. So yeah, you can literally limit yourself to trading only those times, and you'll be surprised. Also, if you don't trade during the open, right, and just let price show itself for like the first 30 minutes, you'll be very surprised, I'm sure, to see just how many trades you will avoid that would have ended in a losing trade if you just follow the rules. More trading doesn't mean more profit, right? Smarter, more calculated, perfectly managed risk style trading is what will, get you where you're trying to go. and being organized. You got to be organized. If you're not organized, you don't have your whole system laid out, at least attempted to try to, or if you don't even attempt to try to do that and explain your process to yourself, if you can't do that, or you haven't done that, you're basically going into this blind, going off of a whim, like trusting that you'll remember every single thing in the moment, in a stressful environment, when money's actually at risk, if you're trading live at all. Shit just flies out the window, right? Like your things that you try to look for will fly out the window if you don't have everything labeled out, everything process oriented, everything calculated, right? It'll just fly out the window. I have a high feeling that this is going to absolutely smash lower right now. But again, the rules are the rules. So let's see. Right? I lead by example. I have rules that say I don't trade at 9:30 Eastern at the open. I have rules that state that I do not take trades anymore at that time or before it or after, unless it's 20 to 30 minutes after. So let's see if that rule serves me well. Right? Let's see. Right? And again, sometimes rules limit you, but that's okay. Because if you go back test and see this specific rule in this specific situation, you'll see. Maybe you've experienced it yourself, where you enter at the open, things look perfect, but then you get totally blindsided and it kicks you out and then goes in your direction. You count how many times that's happened at the open or near the open, before or a little bit after. You'll see that it's like, dude, like, yeah, sometimes it looks beautiful and happens. Sometimes it's just like, well, more often than it's not gonna play out, right? But we have our bias, we have our narrative understood, we know exactly what we're looking for, we know exactly what we want to trade, and there's no emotion on it. So, I'm gonna miss the setup. No, I don't give a shit. I really don't care, because once it gets down below this low here, that's now a 15-minute order block. So now I can wait for price to trade back into that, then seek my model, or enter right at that level based on the 15-minute time frame narrative, and then just act accordingly in line with my rules, versus breaking my rules and running the risk of taking a loss and then being upset about it. Right? We have financial and mental capital, and if either one is exhausted, your performance takes a hit, or your opportunity just gets stolen. And you want to survive at all costs. That's a number one rule. Because if you can't survive mentally or physically or like financially, then you don't have the opportunity. So what's the point? Right? So you might as well follow your rules, make rules if you don't have any, and really, really tell yourself that will make or break you, because it will. Doesn't matter what you learn. The rules that you employ, you're disciplined to follow those rules, it'll make or break you as a trader. And that's generally the difference between those that are profitable and those that are here for a small amount of time and get blown out and then leave. It's generally the difference. So yeah, I hope y'all been getting value from this stuff so far. I mean, yet again, things are doing pretty much exactly what we have called for. So we'll see. Again, if this wasn't before the open price right now, I would have entered that sell. We saw the overlapping implied fair value gap, which also is in line with the order block that we see there, which is also our bearish sentiment for the indices is also fully in line with what the DXY is doing. We can also see that the DXY, I believe, hit I think that's an implied fair value gap, right? So the DXY hit its implied fair value gap, like we discussed, and has now used that as a launching pad to continue its aggressive slaughter to the upside. Right? So yeah, here's the NASDAQ. It's got a very similar scenario. Okay, so let's see the order block on that. It's not only an order block, but you can use this last down candle. This last down candle could be used as something significant as well. So we will be monitoring this last down candle. And that order block to see the reaction that comes about. Okay, and then again, we're aiming for sell side. So yeah, we have, oh wait, did we already have news? I think we have news at 6:15. I didn't even realize. Uh-oh. The hell? Wow, y'all see this? What the? That's interesting. The hell? What happened? Forex Factory? Serious? Damn, their site just is down. That sucks. Well, that's kind of dumb, I guess. All right. But yeah, guys, I hope this stuff has made sense for those of you that have been with me throughout the whole time. Because I mean, it's pretty straightforward stuff. I mean, this is like the third or fourth consecutive live stream, aside from my daily private community live streams, that we've just been it's been really on point. Nothing has surprised us. You know, everything's just, it's just like a beautiful puzzle that we continuously solve. Without overcomplicating things, you know. So, yeah, if y'all got questions, let me know in the comments or in the little chat box. Yeah, we got this fair value gap here. So this implied fair value gap order block entry. Once it got down below this low, there's also the entry for that. It's already taken buy side liquidity here, so that's like the context for that. If you were using the YouTube model, you could have taken this entry if you wanted to aim for the sells, but that's before even the 8:30 time, so that's breaking the rules if you would have taken that. But nonetheless, it occurred, would have offered 5 points. This one kind of, like, we're kind of in consolidation here, for being real. But again, the market maker sell model framework looks like it's also intact from what we've been discussing all day so far. And again, the bias has been bearish, so yeah, I hope everything that we've talked about, you guys, makes sense. if you did show up late, but you see the stuff that's happening currently and what I've been saying, and it makes sense, I highly advise you to just watch the rest of the beginning stages of the video or the live stream, because I talked about all the stuff leading up to where we are today, and I've tried to summarize it throughout, because some people have came and then some have popped on new, right? So want everybody to be on the same page, but everyone's got to be here, right, for that to be super effective. But in a nutshell, things are dropping lower. All right, so yeah, so DXY is pushing. Indices are falling. They've taken out buy side. And so now they're just raging lower, which is exactly what we want. Now, if we start smashing higher, right, that'll basically make it so these equal highs will be attacked. If DXY does choose to tank off the face of the earth, this could potentially act as a breaker. I don't want to see that be respected as a breaker, right? Low, high, lower, low. That's not what I want to see happen, but if that does happen, we can adjust and that makes sense. I want to favor us still getting above this order block, use that as a support level, continue us to go higher. Right, we run the risk of this consecutive up candles being due for a potential retracement. All right, whether that happens today or not, I'm not sure. Right, I'm assuming that we'll continue to go higher unless something changes. Like if this just smashes through this and gets down below here, we're probably going to get down and seek the lows. But if it respects this, then we'll see higher prices. This reaction from this breaker here is starting to show some red flags, at least for the indices going lower. This breaker though, if it does react and that's exactly what it wants to do, then the adjustment we would make for the indices would be the equal highs. All right, the equal highs would then get hit. And then we'd have to see it break above here, use this as support from this little area. Preferably if we have SMT, that'd be pretty nice. I think we do. Yeah, we have it right here. But again, we're before the open. We're about to go into the open, so let's wait and see. This is why we wait, right? But I hope everything's made sense so far, right? And just clean this up a little bit. Got a lot of stuff going on. Okay, so yeah, mind you, if this does choose to want to run higher, there is SMT at the lows here also. Just something to consider. So if it does choose to go higher, the upper target would be here, which is permissible even if we're gonna sell, because that's still even in line with us trying to go higher to go lower. But looks like we are actually not going to do that. Looks like we are gonna be able to trust the sell side delivery. And the open has basically confirmed that. We've gotten below now. We've gotten below this area. So now that becomes a mitigation block right here. And as long as these hold and price continues to rally on the DXY, we will continue to see price sell off. Again, this little area here is basically a mitigation block because this high failed to break that high. Otherwise it'd be a breaker if it broke above and then fell below. But we'll see how that holds. And then we also see this as an order block here on the 15-minute. So if we get down below that, those are areas of resistance we can trust for us to potentially hold and continue to go lower. So that's my perspective. I hope that makes sense, you guys. Yeah, DXY has these beautiful equal highs here. It's wonderful. It's a beautiful area. Shift in market structure. Let's go look at the currencies. All right, GBP. Just to look at these lows. Compared to the highs. And they look like they're all in line, so should be able to see things continue. Still gonna give it a little bit more time because now we're still right at the open. It's never recommended to take a trade right at the open, but potentially this could be something that plays out if everything still continues. Looking at these lows here, we switch back and forth. All right, we could see there's two lower lows and then a higher low. So there's SMT there. So that could be an issue if this was the idea that was taken. Right, and then DXY is now showing it wants to push lower. So again, why was this not taken? Why did I not enter a trade here? Because remember my rules. Right, my rules state that I can't take a trade before the open or up to 20 minutes after. It has to be after 20 minutes after the open. Because now we got our regular trading hours gap in place. So here, this is our regular trading hours gap. Right? And again, rules could hurt. It may deliver. It may still deliver. Right? But rules are rules. See, and again, this whole area, there's the wick here too. Remember I was talking about this wick? How it acts as a premium array? It acted as a premium array and sent price lower. Look at this one. Observe this as well, this wick in here. Let's see if that acts as a similar component. Right? Again, we have SMT at these lows inside this fair value gap. So that may be signifying that it's going to hold. We have these equal highs up here. So again, if sells got negated, right, we would then adjust and look for us to continue to possibly look to pair up or attack further buy side liquidity, which is these equal highs, which is still in line with our higher time frame bias in terms of price going higher to go lower. Right? This is just potentially setting up the consolidation, first stage accumulation, potentially pushing price a little deeper into the retracement on that higher time frame, to then maybe set up the smart money reversal above us a little bit in a further premium. Right? Those are scenarios that could play out if this was to run higher. Again, why are no entries being taken? Right? Because I have rules, and so should you. And would I be upset if this did deliver? Right? I'm pointing it out, showing that this is a possible entry. But it's an entry if I didn't have my rules, right? That I personally engage in. Right? That doesn't mean you have to follow them, right? It's just I lead by example, right? I have to, because what the hell am I doing on social media, trying to showcase things if I'm not going to lead and be true to what I do and what I say, right? Just the way it is. More people on YouTube should be that way, but you know, That's the way it is. So yeah, we're now pushing down below. So DXY looks like it's going to continue. So now we're retracing back into the order block here. So again, if that is in fact the case, it could have offered one more opportunity in here. Right. See, and this is how you study when you have rules. Right? This is how you study when you have rules. You apply the rules and you study your rules. You study what happens during your rules sometimes. What does it follow? Does it deliver? Does it not deliver? Right? When are times it delivers? When are times that it doesn't? Outside of your rules. And do you have the discipline to sit here, watch price, study it, and still apply your rules, even if price is moving and you are absolutely correct, like it seems like I am? Right? So I hope you guys are getting value from this, because man, the last couple of live streams have been just like this. And I'm grateful that it has been that way. You know, I'm grateful that, you know, the people that have hopped on and the people that are still here have been gracious enough to give me your attention. And I don't take it lightly. And every time I'm on here, I'm going to try to give you some value you can use to further your understanding. In not only technicals, but how you need to operate as a trader in terms of discipline. Because if you don't have that, you're literally screwed. Like, you're completely screwed. And it's best not to be screwed, if you ask me. Right? So, but yeah, this was absolutely gorgeous. Right? Everything. Remember what I said about the wicks? It respected the midpoint. Look at the bodies. Respected. And it's just beautiful. What's the NASDAQ doing? So look, we have this big wick here that can also be used as a premium array. Right? Could be considered as one, right? If it comes back to the midpoint of that, maybe it respects that and then continues to go lower. Right? DXY is pushing higher to these equal highs, like we pointed out. The indices are seeking down to the London lows. Price rallied up to go lower, at least for the time being. We do have this fair value gap that price has reached down into, so we will be observing to see how that responds. But nonetheless, if you would have taken this opportunity, like I said, my rules are my rules, and this is all educational purposes only. I'm not a financial advisor, but the thing that we have studied so far has come beautifully to fruition. Right? So now, if price is to continue, I'm not 100% sure now. This looks pretty vicious. That could basically totally change the whole dynamic of what's happening with this falling the way it is. And then once price gets above this, if that's the case, I mean, this already offered you a good enough entry to gain 11 points. Right? This second entry would have given you 10. Right? So that was beautifully delivered. Right? But now we're reacting from a discount array. Price on the DXY has now looked like it's changed. It may want to drop lower. So in terms of this, I would be considering adjustments potentially to seek these equal highs up here. Potentially, right? And that is only if this high breaks. Otherwise, there's no reason to get out of the trade if I was in a trade. You don't just automatically switch, right? Like, you have to sit and think. The first thing you think is are the things I'm looking for, are they holding in price? Right? Or are they not? And in this case, we need 3 PD arrays to be broken. We need our entry to be totally disregarded and DXY to totally change. This looks like it's hinting that it might change to do what? Might change to, instead of attacking these highs, it may look to retrace down to that sell side liquidity over here. Right? Because these are in reality equal lows, and there is a fair value gap down there. It's also came back to the breaker here and now responding off of that. Right? So if price does get above this order block, this high here, and starts breaking through highs from this area, then this could have just been a manipulation, right? Retracement to then push price to go higher. But if I was in this trade, the one that I mentioned to go lower, I would not be getting out just yet. I probably would have got out like 10, 15 points, because that's generally the target I have. At least take partials from there, at least at a minimum. And then still asking myself, is everything still in line with what I'm looking for? Not, is it going to stop me out? Because that's like counterproductive. You ask, is it still presenting the things that I'm looking for in price? And if the answer is yes, then you stay in. If the answer is no, it's starting to break through PD arrays to the upside, then you have to consider, am I going to get out, save what I have, or am I willing to sit through things? But when DXY looks like this, I definitely take the first chance I can get to save and get some money. Because that's the whole point. It's not to get like 500 points. It's to make money. And if it offers you making money, but things change like this and go opposed to what you're wanting to see, then you got to make that decision. You have to be responsible. Think, I'm here to make money. I'm not here to impress nobody. I'm here to get in, make my money, and get to the sidelines. In this case, the entry that I gave, those two, would have gave me personally the target that I wanted, with context around it that basically came to fruition. Right? We did say that there is a risk of price coming up into here. Price wasn't changing until it did. Right? So in the moment, you have to be flexible. So in this case, we'd have to be flexible and observe what's going to happen here. So if price gets above this high here, this becomes a bullish breaker. And so then that would be, in my opinion, the better opportunity. At least if price continues to do this on the DXY and then does in fact want to seek the fair value gap we outlined earlier. Right? So yeah, we have to wait and see. And if you were trading the NASDAQ, look at the craziness. Would you have felt comfortable in here? Is your model showing in here? If it's not, then you have nothing to worry about. You didn't miss nothing. If the entry that I showed earlier from in here, if that was something that didn't line up with your model, was that your entry? Or if it didn't make sense, was that your entry? No. Right? But look, so since it didn't break above this high, nothing has changed. Right? Nothing has changed just yet. That was a possibility if it got above this high, but nothing's changed. Right? This is not something you'd like to see though. Right? So keep that in mind. If you are bullish and you're in a trade going higher, it's not what you want to see. You don't want to see it do this type of nonsense. Yeah, let's see if our London low target that hasn't changed just yet actually gets attacked. Right, this is very vicious with the DXY. It's a very vicious, volatile environment. So you gotta realize that's the environment we are trading in. When it comes to geopolitics and all this stuff that's going on, things can do rapid craziness. Right? So you got to know what will change. If this happens, then what do I do? Well, if this high breaks, I'm not bearish no more for the time, for a moment until it kicks back in. Right? But for now, nothing's changed. It's respecting this order block. Right? It just went from, you go from high to low. It's just a retracement. Respected the midpoint of this wick. It respected the midpoint of this wick. Right? And it's continuing to press lower. DXY is the red flag here. Right, so again, if I would have entered in the S&P earlier, I would not be in a trade right now. I would be out already. I would have gotten my money and went to the sidelines and just observed. But again, nothing has changed in terms of the overall narrative. This is still something that went higher to go lower, in my opinion. No validation points have been invalidated. We return to this order block here that I had outlined. Right, we're not in the silver bullet yet. We're about to approach a macro. So yeah. Let's see, is there an order block here? There's no order block, but there is a wick, a large wick here. You can observe that midpoint and see how that's respected. This is studying institutional order flow. You're watching the relationship as the candles print. So yeah. So the first two opportunities that I gave were beautiful. Look at how beautifully they came down. Again, I outlined things that would have changed the scenario. Ask yourself, did any of those opposing things occur? We made sure that we were aware of what would have changed the narrative. We made sure to realize that in the condition we are in geopolitically, that getting the smaller amount, where we would have taken partials for the first two entries, that would have been anywhere from 10 to 15 points. Then the stop would have been moved, right? It would have been moved to break even, to lock in. Price never even came back to that entry. And we have slid all the way down to our objective. Which has now been fulfilled. Okay, so I hope you guys have liked these things that we have went through today. Yet again, we've been completely in line with the bias and the overall narrative. That's for like the fourth live stream straight. So yeah. We've laid out in the moment management. We've laid out market maker models and how that impacted my assumptions today. And yeah, I really hope you guys get some value from this. I do try to give as much value as I can. Because I want to see y'all win. I truly do. I wouldn't be on social media. I wasn't on social media doing this for a while. And then I was like, I might as well start trying to share things because I'm not a rocket scientist, okay? Like I'm not some computer coding genius mastermind. I'm just a normal dude, right? I have a family. You know, I do normal people things. And yeah, I'm just like everybody else. The only difference is I never quit. In the last 4 years, there's been plenty of times I could have quit. You know, like the first year, I lost $12,000 doing reckless nonsense when I could have used that money now when I have the skill set. You know, but that's just something that people that are stubborn have to go through, I guess. And I'm definitely one of those stubborn people. Maybe that's like you. You know, maybe you guys deal with impulsiveness. Maybe you guys deal with doubt. Maybe your family doesn't support you, whatever the case may be. None of that should be looked at as a deterrence. It should be looked at as a motivation, you know, and you shouldn't be in there trying to gunsling 500 trades a day, blowing accounts, spending $100 here, $200 here in accounts, and just blowing those accounts. You might as well save that, build yourself a nest egg, so then eventually when you do have the skill set, you can be confident in yourself to go and actually engage. Versus being from a place of despair and like from a place of like, I need to make money, like, or I'm gonna lose everything I have. Because if we're at that perspective, if that's how you approach this, that's exactly the mindset that gets victimized. And that's, in my opinion, why the barrier for entry is so low. Because they know people will come in here with the promise, the assumed promise from all the marketing and the things that people say. People will come in with that mindset and think, oh, well, you know, I can get rich quick. And they quickly get removed. Like, you know, or pay somebody else's bills. You know? So, you know, it doesn't have to be you. You know, the power is in your hands in that sense. But, you know, it's important for you to be around people that actually talk like this. You know, that's why I love ICT so much. That's why he is the one that changed my life. You know, and some of the traders that have been gracious enough to give me their time as well. You know, I have nothing but respect for these people. because they tell you like it is. And people like to be lied to for God knows what reason. They want to be lied to and said that, oh yeah, it's going to be easy. It's going to be, you get rich tomorrow, like quit your job. Blah, blah. They want to hear that because it's entertaining or it feels good. But when you're in the market, it's you versus you. You're staring at yourself and your impulsive behavior. Also your strengths. When you look at the markets, you're looking directly into a mirror. And if you don't manage yourself properly, if you don't manage your finances properly in general, like if you're a reckless spender and whatnot, and you just don't value the money that you've worked your ass off for, it will be taken from you quickly. And, you know, it'll feel like it was stolen. And like you were manipulated to get it stolen. And technically, that's what happens. You know, the market operates and moves in a way to manipulate you into putting money in and thinking that there's an opportunity every 5 seconds for no reason. But that's why you gotta have the right people around you. That's why you gotta have your circle of influence small. Like, I don't follow a lot of people to watch how they trade. You know, I just don't, because I've found my way. But when I was early on, the first year or two, I definitely needed that help. And, you know, something like this, there needs to be more of stuff like this, like what we were doing today. Not, oh my God, I made 20 grand right now. Oh my God, look at me. Like, who cares? Like, I can't spend your money. Like, what are you going to show me that can help me move forward so I can do it myself? You know, how can I get this skill set for myself and my family? Like, when you watch people, that needs to be your perspective. You know, and I try to, you know, put little pieces in everyone's hands from how I view things, so that hopefully some of those things can be taken as well and added to you, you know. So yeah, there needs to be more people doing this versus trying to sell, oh, you're gonna get rich tomorrow, right? So everybody that knows how to trade, everybody that can trade and is confident in themselves, that's willing to help people, whether it's through a service, whether it's through doing live streams, if you have value, the industry needs you. Absolutely needs you. Because there's people getting really ran over and times are rough for people. So if you can provide value and actually are sincere, again, the trading industry needs you. You know, that's why ICT pushed his students, once you learn, go out and start showing things. You know, go show that it's possible. You know, don't be a dick, right? Provide value and just be a sincere person. You know, so it's much needed. Yeah, again, I appreciate all you guys have hopped on. We're going to be on probably for another hour, just to try to frame out and see what's happening. Just wanted to lay out some mindset, housekeeping portions of things, because it's definitely needed. Because getting this to go to there is not the only thing, right? Like me doing what we've done today, outlining scenarios, that's one part to it. You know, but trading it's very deep. It's a very deep thing, and there's things under the surface that people don't see that actually are more important. Because all these technicals are great, you can understand them, but when it comes to you being in the market, you have to have certain mental skill sets and perspectives in place, so you can actually apply what you're being taught, like what you're seeing play out, you know, and what you're trying to do. Because all that stuff gets paralyzed if you don't have the right mental skill sets and the right perspectives. It's just like going to war, you know, like if you have a strategy that's proven to do well, but you have an incompetent leader that doesn't know how to actually think through problems and direct and lead and do these things that have nothing to do with strategy, then the strategy is not going to work out. Right? And so it's the same with this. Your money is your soldiers that you put into battle every day that you push a button. And you being the operator, you're the leader of your army. So you need to be able to have the right approach mentally to basically go hand in hand with the technicals that you apply. So your army that you send out, that being your money that you put in the marketplace, can come back and bring you a bag, right? And not become a casualty of financial warfare. So we can see how, kind of stepping away from that discussion. I hope you got some value from that. But stepping away from that, we could see how DXY is now rallying. The indices, let's go flip through. All three indices are rallying. So now there's a lack of symmetry in terms of risk on and risk off scenarios. So now high probability is lowered now. And we've also, again, fulfilled the main target that I was looking for price to reach into, which was these lows. Right, so our objective has been fulfilled. And again, we still have these equal highs left. So if DXY chooses to turn and then try to go lower, that may change things and then continue to press us higher with more confidence. But for now, until things get back in symmetry in terms of DXY falling, or DXY in this case rallying, complemented by the indices falling, until something is symmetrical, I'm not interested in taking anything, right? Even regardless of how it looks, because again, it goes with rules. The rules. If you don't have rules, you're not gonna have an account. Okay, it's just simple as that. No beating around the bush. People say, oh, I don't need rules, I'll just go off of what's in my head. Okay, well, as a human being, we're imperfect and make a lot of mistakes, correct? We're very forgetful. A lot of people are, right? That's just the way it is. So you're putting your trust and confidence in something that is imperfect. You might as well amplify things so you can trust them by being organized and having your rules in place and building discipline to follow those rules. And right now the rules are things need to be symmetrical for high probability. And since they're not symmetrical just yet, things are all moving in the same direction, which is not what's supposed to happen, things are low probability. And we did say early on that there was a risk of this turning around, going higher, to dig deeper, right? With DXY going higher, the anticipation would be for indices to go lower, but that's not happening. So the first rule of high probability has to do with market symmetry. Are the markets symmetrical? Meaning, are the relationships following what they need to follow? If not, that means that there's manipulation in the marketplace, and things will not be respected that we traditionally look at and operate within. Right? So because that symmetry is out of line, we'd have to wait for things to get back in line. So if DXY, for example, wants to continue going higher and doesn't turn around, then we need to see this retracement turn into price falling lower. We did leave these equal lows here, so that could be something that it wants to reach for. This whole run higher could just be to come and stop these people out. If you look at from this high to that low, we're now in consolidation. So that's another thing. High probability, it can be framed in some scenarios in consolidation, but generally consolidation can do whatever the hell it wants, right? Because it's just building sentiment, it's stacking liquidity, it's doing a bunch of things to hold price in a particular area, so it can build liquidity and sentiment to then manipulate one way and then go the other way, right? But given what we're looking at here, prices basically came back to our mitigation block, which that's what this is. For those that didn't know what this was. So now that mitigation block's being respected. When would I get back in line? If DXY continues, how can I get back in line with the S&P or the NASDAQ to go lower? Well, I'd like to see swing lows start to be broken, right? So technically, I'd like to see these continue to smash through, DXY continue to go higher, and then I'd like to see this swing low here break to kick us back into a shift in market structure to continue going lower. Unless there's one that forms here then I can observe that one. And if DXY continues to go higher, this could be technically considered a run on stops, because that's what it was. And then a shift in market structure that's presented with the fair value gap, if you're trading the YouTube model, that can be your continuation variation to get you back in line with the bearish overall sentiment that hasn't changed, at least from a higher time frame perspective. I hope I didn't lose y'all. If you're confused, let me know in the comments so I can, if you're ever confused, leave things in the comments so I could backtrack and keep pulling you all along with me. So yeah, it's potentially going to set up a swing low here. I'd like to see a swing low set up there and then see DXY continue. Maybe see this, create the swing low, break the swing low, come back to a fair value gap, and then potentially push us lower. You could be thinking, well, this is a run on stops. That's a shift in market structure. Why are we not favoring the buy side? Well, I'm not favoring the buy side right now because my higher time frame bias is what it is, and that may be incorrect, right? The higher time frame bias may be correct, and price may want to run up here. That's fine. I have what I want to see, and if I don't see what I want to see come to fruition, then my trade is not there. Rules. Going back to what I said, rules are important. They're the difference maker between you surviving and you getting blown out and not having a chance to make any money. Right? So, and then of course, DXY has to be falling bearish. It has to be running bearish, clearly, for me to anticipate us potentially going higher. But again, this whole run higher was just in the context of the higher time frame to go lower. So any type of bullish move is looked at as short-term or near-term in nature, counter trend. And then, you lower your risk. There's protocols with that, which we can get into at some point. But overall, I'm still wanting to see us get down below. And we also left these equal lows, which makes me feel like they're not done. Right, so prices now broke through these inversion fair value gaps. They've now turned into inversions because they've smashed through them. DXY has now prepped multiple equal highs, so now I'm really not trusting them to leave those open. And if it goes higher, this should go lower, which then favors the narrative for us to look for price to potentially seek these lower prices. But we'll see what happens. That's what I'm thinking right now, though. Let's see what the NASDAQ's doing. So the NASDAQ looks like it may want to reach up above here. So this fall in the DXY, if it's falling to go higher and take these out, that may be sending this higher to come and sweep these highs, which then may present us with a beautiful silver bullet YouTube model potential entry after taking out the buy side here as a run on stops. Right, that's what I want to see situation wise if we're going to try to frame something on the NASDAQ to go lower, because we basically swept all these people out. You got to consider who's up at the top of this. All the people that were selling, they moved their stops above these highs here, right? So they've been stopped out now. They left these equal highs here. They're equal highs. They don't like to leave these available, right? DXY has equal highs up there too, right? So we want to see if that's going to be attempted. If that's attempted, price goes higher, that should send this lower. But I want to see us get above these highs to try to set up a framework to start anticipating the YouTube model. You could try to make the argument that, oh, well, this was a shift in market structure and it came up and, left this and went up and that was a move. Yeah, if you think that was a move and it made sense to you and you would have felt confident, don't make me push you to the side, right? Like, you're your own individual. And if that makes sense, that's totally wonderful. And it makes sense, right? It could have been a move that could have been entered if you had the context around it and it made sense to you, context-wise, right? But again, these are all counter trend moves that are going higher because the overall bias on the higher time frame, from what I've observed, what I've laid out that has come true, has been bearish. So that's what I favor, and this doesn't fit my personal view, but that doesn't mean you should disregard what you're seeing in price. That should never be the case, because I can catch sells and you can catch buys in the same price action, and we could both be correct and profitable. One may go further than the other, but if you made money, were you actually wrong? If you got in, managed risk, hit a target, and went away profitable, are you incorrect if it turns around later? No. Was I wrong because price turned around here, but it went and turned around after it hit my target? No. I mean, some people could say I was wrong, but if I would have made money there, if I would have entered and it was in my rules, I would have been profitable. So whether someone thinks you're wrong or right in that context, it really doesn't matter, right? Did you make money or not? That's what you should focus on, not was I fully correct and did I catch the whole move and did it not turn around? That's just myopic view, So the key is, did you make money? Could you make money given your process? And did things play out enough for you to take a trade, manage a trade, hit a target, and get out of the trade and come away with a win? That's what matters. And then it's a cherry on top if you're able to navigate things the way we've been able to navigate it, both here on YouTube as well as in the private community. And it's been happening for years at this point, So yeah, like I said, the mitigation block from earlier has basically shown respect. We have the swing low here. Price has rejected from that. I mean, if you take this high and this high, you switch to the NASDAQ, you can see there's SMT there. Also between the Dow, there's also SMT. So that may be something to study, right? And if price pushes lower, which I would like to see, if price does push lower off of this, that basically was impactful. There's a fair value gap here, so it's, in my opinion, looking like it wants to reach up into that and then potentially use that as a trigger to go lower, because we still have this sell side here. I think, yeah, that was a previous day's low. So we got London's low that's been savagely, well, slightly taken out. Whoops, let me make this more clear for you. London's low has been swept, right? And the previous day's low is open. We have the, I guess, oh yeah, that's a London's high up here. Right, so you could just look at the price delivery so far today. There obviously, as we've pointed out, has been opportunities. But given what we see, price is literally, what has price done today? It's been an indecision candle. Right, where's the open price? This is the open price. Right, price got down below, rallied up, came all the way back down, got below the open price, and then now it's pushed away from it a little bit. DXY has left equal highs. It's retracing now. It's kind of done just a lot of sporadic behavior. But again, even in the sporadic behavior, we've been able to outline this beautiful entry. Real time. With two opportunities to enter that both came to fruition. Right? So even in the chaos, if you understand specific principles, you're able to navigate in any condition. Does that mean you should trade? Have I taken a live trade today? No. because the rules haven't set up, things haven't aligned with the way that I wanted to see things occur. I did point out some that were outside of my rules, that if I would have taken and broke my rules, they would have came to fruition. But again, I lead by example. I don't say go break your rules because it looks good and it may play out. That's a gambler mentality. I've been victimized by that mentality. So eventually you'll come to terms with, yes, you have rules. They're going to prevent you from taking some entries, even though they play out, even though it made sense, even though you were confident. But in reality, it's going to save you a lot more than you'll miss. Trust and believe that, because I've learned that from experience at this point. You know, and I've heard it from many, many others. Jade Cab is one. Paladin's another one that talks about the same thing. Sometimes, you know, you can bend your rules a little bit, right? But you got to have some experience to be able to do that, to be able to confidently do that, to know that you're not going to beat yourself up if you take that loss after breaking your rules that you know you should have listened to, you know. And at the end of the day, you can follow your rules and miss setups, and you won't miss enough setups to not have a career, like by, you know, following your rules. It's what you should do. You don't go to your job and break the rules just because you feel like it, you know. Like you don't do that, because you have to follow the rules or you'll get in trouble. Well, make it so you'll get in trouble with yourself, because your account will get you in trouble if you don't follow your rules, and, you know, things turn around and blow you out. Right? Remember, we have rules to prevent damage, right? You know, sometimes the rules get in the way, but it is what it is. Yeah, we're observing right now to see what occurs here inside this fair value gap and what happens with DXY. I'll tell you what, if DXY gets above this high, right, I feel like it's going to attempt that, which then would potentially kick this into us attacking the sell side. But again, we are now in consolidation, and inside this range, from this low to this high, this is equilibrium. So when price gets to equilibrium in a particular range, generally that can give us consolidation or choppiness, which we kind of see an example of here. It's kind of chopping around at that equilibrium level, given this current range. So yeah, just something to consider. Again, if DXY can get us above this high and rage higher, then that would be indicative of us then potentially seeing this want to go lower. I don't think they're going to leave these highs. At least one of these indices is going to take out those highs. And in this case, it looks like NASDAQ's going to be the one. And if one breaks the highs and the other two don't, what does that give you? That gives you SMT, right? And that would basically leave us with an SMT here with equal lows at the low, right? So the AM low. Previous day's low is also down below there for possible target if it does end up wanting to race lower. And then we'd like to see DXY go higher to confirm that.
Watch 100 plus channels and enjoy cable-free live TV with YouTube TV. Terms apply. Cancel anytime.
So take this into consideration too. Oh, we see another implied fair value gap here as well. You see it respecting. I hope you've been able to visually see the implied fair value gap today. We've pointed out 3 of them that have came to fruition. One of them is right here on the DXY. I'll let you go rewind the video, kind of see some of those examples. We had one up here as well, which was another implied fair value gap that led to the sell-off before the times I like to enter. So again, my rules kept me out of this one. My rules kept me out of this one, right? So it is what it is. I'm not angry, right? Because I know everything's going to continue to set up. But yeah, so we didn't see this break this high. Again, I said that there's this implied fair value gap. So that obviously offered an entry to go higher. I didn't want to see this go lower, but there was that risk, right? Things in this case have just not done what I personally would want to see happen. Again, we have called out moves. There's been moves that have fully played out. 3, actually, if you include this implied fair value gap from earlier up here. right? So 1, 2, and then this return back into this was 3. But again, they were outside of my rules, and it is what it is, right? Yo, my boy Nico, what's up, bro? Man, how long have you been on the call, bro? It's been a pretty crazy morning, dude. It's been a wild morning. So yeah, like I said, you guys, this basically broke whoops, wrong chart. So now the NASDAQ has broken the highs. That is something I like to see, right? So that's a beautiful run on stops inside the silver bullet window. So now if we could see price start to punch lower, again, remember this run higher, this one, and now this one, they're all retracements inside the larger scheme, right? Oh, beautiful, bro. See, I was looking for sells. Doesn't mean you can't take buys, right? Clearly there was something set up. But again, we're inside that narrative we can't forget. So any buys are near term, short term. So you got to take your profits quickly, or at least at a reasonable place. Don't expect the 150 points. But yeah, hey bro, send me that in the private community. Send that out. Send your analysis. Definitely want to share that. But yeah, so like I said, with DXY potentially, well, us wanting to see price go higher, since it has these equal highs, I don't like selling with equal highs. That's why another reason why I also didn't take the sells here, because we have the risk of these equal highs being taken. NASDAQ has now ran these highs, so that left S&T, and we look at the reaction off of the high that has been taken, right? So now, what will we do to kick back in to possible sells to get back in line with us, possibly for NASDAQ reaching down below London's low and the other ones as well? Well, if we want to frame that out, if we start seeing swing lows break after this buy side sweep, as well as having the S&T, if that remains in place, same with this, right? If that remains in place and we start seeing shifts in market structure lower, that could reasonably be looked at as a shift in market structure back in line with the overall bias, right? So then that means that this equal lows here is now in the crosshairs, but I want to see DXY turn around. If we're selling and DXY is selling too, so sometimes it works out. Yeah, sometimes it does. But a lot of times that's going to come back and eat you, right? It'll turn around quickly. At any given moment, something can go wrong. I mean, that's the risk in general, but it's highly probable that if something happens in the DXY, if they're both going the same direction, it could change at any given moment, right? So we have our side that we're favoring, which is sell side. In this case, if the NASDAQ does break down below this low, I will probably try to look to position. And again, if that doesn't happen, I'm not gonna press the issue, right? I know what I'm looking for. I know what the bias is that I want. We've had a lot of choppiness, and I personally I want to see what I want to see. Again, just like my boy Nico just said, he took a buy, right? He was able to take the buys. He wanted to take the buys, right? And there's nothing wrong with that, right? I have what I want to see as well. Same as you. Like if I take a sell and you see a buy, don't take the trade. I'm not saying take any of my trades, right? Because I'm not providing financial advice. But yeah, you got to be an independent thinker. Now you could take some stuff from the analysis and try to apply it into your perspective and approach. That's absolutely what you should consider doing, right? Taking some of the things that we've discussed and try to use them for yourself, right? And come up with your own ideas. You know, use this as an educational view, how to apply certain things. Validate some of your own analysis and concepts, like the way you apply things. And try to grow from it. It's the whole reason why this is even a thing, right? That's why I have a private community, so I can help people more intimately. That's why I do these YouTube streams now. I wasn't streaming before. Now I'm streaming 2 times a week, Tuesday and Thursdays, 5 a.m. Pacific Standard Time, just so I can showcase specific things to help anyone needing to just see it in action, so they can just have that resource to see it in action. So it's not just watching videos and based on your own understanding. See, so now we have this swing low here. If DXY is turned now, doing exactly what I wanted to see happen. So once we break through this low here, we now have a shift in market structure after buy side's been taken, right? So buy side's taken. We have equal lows down below. So now this is when I'm going to consider. This is when I consider looking for potential setups. Especially if DXY continues, we have equal highs, beautiful narrative. So now I'm going to consider taking an opportunity here. Okay. So yeah, now we just need price to return back into the fair value gap to then give us that entry. We would need it to create a fair value gap and then see if we can catch price moving lower. Why do I trust it? Because there's an SMT at the highs. Okay, there's SMT at the highs. We now have a fair value gap being created. DXY to confirm would have to go higher and reach out for those the buy side liquidity up here. And then if all stays true, then we should see a beautiful idea. Yo, beautiful. Yo, I got the squad here. What's up with my family, yo? So yeah, watch that fair value gap right there. And then of course, the target would be just like we were targeting on the S&P that came to fruition earlier. Except this time we'll be in the NASDAQ. And of course, the NASDAQ is a freaking monster. So hopefully we can get this to play out. Let's just sit and watch what happens. What would invalidate this? You see these 2 up candles here? If those get disrespected, then we basically, of course, get away from it. So yeah, so now we just sit and watch. Is price supporting everything that we've been looking for it to do? DXY is kind of in a choppy range, but everything that has come to fruition so far is everything that I personally, and anyone else that's using the YouTube model personally, would like to see, right? It's all beautifully done, exactly what we want to see. Again, you're not sitting here worried about, oh, is it going to stop me out? No. Is price doing what you're trying to see it do? Right? Is price doing what you're trying to see it do? And if it is, then guess what? You don't worry about it. So we have a potential target here. This will be the first target. Let's hit this midpoint of this wick here. So I want to see it punch lower into this wick a little further. So we'll see what occurs. Again, not financial advice. So yeah, nothing has changed. Be at peace with the entry that you've taken. Observe the fair value gaps. Observe the wicks. Are we going to respect the wicks here? As price delivers, are we respecting the midpoints of wicks? Right now, like the next couple candles, is the DXY going towards the bullish direction, which supports us in terms of price potentially seeking lower prices? If all that is in alignment, you just relax. You have no need to worry. You should have your stop if you did enter in a demo, quote unquote. Remember, watch the wicks, watch the relationship. It's a very important aspect to institutional order flow. As price is being managed, watch the wicks, even the down wicks, these ones. As price is moving, watch how it respects it. See, I'm probably going to end up taking profit there because it is hanging around a lot more than I'd like. And we don't want to see it come all the way back. So actually, in reality too, this down candle, this is a breaker. Should act as a breaker right here. Kind of sloppy, but yeah. Yeah, watch the wicks. This is hitting an up candle. We want DXY to continue to press. If it keeps pressing higher, we should be able to get this to go lower. And now we have hit the target, and I have collapsed the trade for a little bit more than I was looking to take. And for evidence of that, here's the entry from this high to that low, trade of 8. Which has to do with top step, and then also let me pull up the other one, this one as well. This one is amp live. It's a flashing little button there, right? It's a real page. Right, no foolery. So yeah, my private community know what time it is. It's constant. But yeah, see, so that was a peaceful experience. Was I panicking? Was I scared? Was I saying, oh my God, it's going to get me out, it's going to take me out? Was I freaking out? Absolutely not. And I totally have nothing against you doing that, brother. You know me. I come in once my 20, 30 points in NASDAQ is hit, right? Once my 10, 15 points in the S&P is hit, I am good. Especially when I have both of them running at the same time, I'm solid. You guys know what the target overall could be. We know what we've placed into the market in terms of expectations, and that's where it could go, right? But given just like the nature and the condition that we're in right now, I have pretty much decided early on, once we started doing this move here and it just started looking crazy like this, there's so many news events lined up, plus FOMC style news events, at least something like it at 10 a.m., 1 a.m. or 1 p.m. Eastern, I think that is. If you measure out the fib projection from 2 standard deviations, measures out the low. Beautiful, bro. Mind you, we've had that low marked this whole morning, all the way down there. Are you talking about from this high to that low? In terms of a projection, let's see. It does come pretty close. Yeah, it comes pretty close. Where the hell did it go? Yeah, right there. It does come pretty close. Exactly to that low, pretty much. Yeah, it's wonderful. Wonderful, wonderful, wonderful. Yeah, let me take a screenshot of this. Can have that shown and documented. And so keep this in mind too. I journal all my trades. I journal my everyday situation, and the private community kind of sees that every day. Now it's kind of been more on the videos, but if I took 500 trades, how in the hell am I going to be able to manage that and have time to do it and remember all the thought processes that were going through my mind and all the different things that I have to note if something out of the ordinary was happening? It's not manageable. It's just totally not. So yeah, that was our silver bullet. Beautiful scenario that played out. Excuse me. But yeah, pretty flawless if you ask me. 4 in a row, 4 live streams in a row. So we're gonna continue doing it. It's not gonna be perfect every time, right? I'm a human being, right? I make mistakes, but for the most part, especially for those who have been with me in my private community for the last 2 years or so, it's amazing. Things are pretty amazing. I'll let you know that. And I want to get each and every one of you to that point so you can experience that. And then not only that, experience it for yourself, but also be able to share it with your family. I have a daughter, so I look to eventually, if I can, give this skill set to her somehow. Maybe you guys have friends that you care about, family that you care about. Trading, again, like I always say, trading's more than just trading for yourself and just technicals and all these different things. There's a lot of things you can do with this industry, for personal situation to also helping the people around you, whether that's people online, whether that's your friends, your family, anybody that you care about. It's a truly amazing skill set. So yeah. Okay. So yeah, in all reality, made a little video on the breakdown of my trade. If I was too big to send in Discord. Damn, I hate how that happens. I freaking hate it. Oh wait, you can't. Wait, can you see the charts now? Uh-oh. Yeah, let me know if y'all could see the charts now. What the hell's going on? Wait, what is happening? Can y'all see them now? I hope so. I don't know what happened. You made a little breakdown. Oh, send me that through email, brother. Nico, just shoot that to me through email. Oh yeah, post it on YouTube like we've been talking about. Yeah, yo. Yeah, definitely. That's what I was saying earlier, how this industry like really needs more people like us that know what's going on, that's sincere, or even that are growing, you know, because there's people that are struggling continuously. They just need that validation that it happens to everybody. Like today, you saw me flawlessly knock out or pump out 4 trade ideas live. 4, right? 1 was the initial implied fair value gap that sold off. Here, let's go through them. Let's go showcase the moves that happened today. So there was an implied fair value gap in here somewhere. Okay, right here. This implied fair value gap. So that one I called out too. I'm like, this implied fair value gap should hold, and then we should probably seek the lows. And then it basically seeked the lows. I did mention there was a risk of us running back up here, but nonetheless, nothing changed, just like we thought about over here, how nothing changed, and price delivered. So this implied fair value gap was 1. I believe there was 2 here, right? So at this fair value gap here on the S&P, right in here, there was 1 entry in here coming into the mitigation block, the midpoint. That was an entry. And then I said where I wouldn't have entered through the low here, price returned back into these up candles, and this down wick too, also at the bottom of this mitigation block and the order block, which I think was on a 15-minute time frame. Then price sold off from there. So that's 3 possible entries. One was over here, the implied fair value gap. 2 here, 3, and now 4. And of course, you can see that this 4th one was the biggest one. Well, it didn't really present it as well in the S&P as it did in the NASDAQ. Right? Actually had a SMT with this fair value gap here and this high. The NASDAQ came back into it. Right? Well, the S&P did not. Again, there was also the SMT up here that led to us believing that it was now time to sell off. And you see the fruits of that. So yeah, this has been the 4th straight live session that we have been, for one, in line with the idea of bias, deeply in line. My rules were showcased, showing why they were there. I hope this proved to you that following your rules does not remove your ability to have opportunities. It actually puts you in front of the better choices for the most part, and it'll save you from getting, from getting ran over by manipulation. Rules are rules. Like, they keep you in line. And then we talked about SMT, pointed that out. We pointed out why this rally higher could have been expected to go lower given the bias. We talked about market maker buy and sell models and how those work on the lower time frames, and how they correlate within the higher time frame perspective. Right, we touched on that a little bit. And then we saw the YouTube model perform. We discussed 4 ideas that played out. We called a draw on liquidity on the S&P, which hit beautifully, which was this low, the London's low. Came down, swept that out, and then price returned back. I said that one of the indices will likely break the high, and then the other ones will not, and that will present us with an SMT. And what do you know? That exact thing happened. Because that exact thing happened, we engaged price and came out on top. So today has been a flawless performance, at least perspective wise, in terms of what I'm going to go journal. Today has been a beautiful example of my discipline and how you should operate in the markets when you have rules, and why it's so important to have rules and follow them and build the discipline to follow them. You know, get around people that do these types of things, that take these types of things serious, that want you to succeed, that give you honest opinions, tell you when they're wrong, tell you when they do things correct, and why, not just, hey, I made money. I didn't mention any money today because it's irrelevant to everybody. You know, you can't spend my money, you know, right? Like, I'm trying to get y'all to spend your own money, get your own money in these accounts and grow them and be able to, you know, help your family safely, right? But yeah, so I think I'm going to leave y'all there. We have had the silver bullet delivered and all the topics we've discussed. And again, if you guys haven't subscribed to the YouTube channel or showed up to any of these live sessions live, if you have the chance to, I highly suggest you do so. There's a ton of value. We're going to continue to pump these out. I'm going to try to figure out how to get some of my private community students on here as well to come and beat the market up with me. As you could see in the comments, they've done amazing this morning as well, with their own decisions in terms of, you know, buying when I'm looking to sell, or vice versa, or just in line with the overall narrative that we've painted, right, from the start, which has also carried over from the other live streams. Because again, bias doesn't change every 5 seconds. You have to have a reason on the higher time frame to change it. And yeah, if you definitely got some value from this, like, comment, and subscribe. Any questions, concerns, let me know. And I will see you on the next one. Appreciate you guys hopping on. Take care.